All right, we're at the point in the term here in financial foundations where we've covered everything that's assigned to us. So we've got a unit 2 test to do this week, and then next week is the final. So Tuesday and Thursday next week, I'll open the Zoom session, but there won't be actual instruction unless you want to come in and get some extra help on something. And it doesn't have to be extra help on the final. It could be any of the assignments. It could be the previous 2 tests if you're not sure about something. So we're going to use the class time, the scheduled class time next week for more like question and answer or tutoring assistance. Okay. So if you don't need me, if you don't have any of those kind of concerns or questions, you don't have to come. I know some of you got other online materials that you need to finish up in order to get to the finish line and graduate. So concentrate on making that happen, get that stuff done. And similar to some of the other classes, the final here for financial foundations isn't that lengthy, but I did put up a review sheet in your Google Classroom materials that will kind of be our guide for today, and it may not even take the whole period to get through it. So this is what you would find. You know, right away it says review your past work. Well, if you haven't done all the homework assignments, that could be a problem for you because, you know, this financial foundations class does not have a textbook. Anything that we talk about or work on in class is potentially subject for a test where something could be pulled out of those materials. So, you know, if you've missed class or you've got work that you still need to do, you know, go back and look at those class videos, get those assignments completed. It's not just about getting the grade into the grade book for the work. And that's, of course, that's important, but it's about knowing the material also. So in case there's a question on the final, you'll be able to address it. So this review handout is broken down into some sections, starting with basic economics. Does anybody remember or can they describe, give a definition of economics? What does it mean to say we're studying economics? Is economics about money?
Yes.
See, I mute myself and I'm trying to answer and I forgot that I'm muted.
Okay, Ruth thinks economics is about money.
Yeah.
Not exactly. Economics is about choices.
About buying and selling, buying and selling. Just kidding.
Okay, the reason that I say it's about choices, go back to the first day's definition. It's about the concept of scarcity, right? We have unlimited wants, but our resources are limited. So what we can actually obtain is limited. Our resources are scarce. So we have to make choices about what we do with those resources. That's what economics is about. It's about the process of making decisions about how we obtain those limited, what we do with our limited resources. And on the big picture, it's about what the society chooses. Think about oil, for instance. What has society chosen? Well, we're trying to stretch the supply of oil by requiring high mileage cars, right? If you're gonna build a car, it's got to get 25 or 30 miles a gallon. And I know there's exceptions, but that's one of society's choices. Just ultimately, it happens to end up dealing with money most of the time. But you got to remember the concept of scarcity. You got to remember it's about choices. Can you define opportunity cost? If you haven't looked at this review sheet yet, and if you were expecting all the answers to be on this review sheet, I'm sorry to disappoint you, because that's not a proper way to do a review for this kind of course. What I'm trying to do here is identify the topic areas that you need to know about. And so if you see something on this list, well, hey, I don't remember what opportunity cost is. That should be a red flag for you to go back and look it up. Go back to your notes. Okay, what is opportunity cost? Oh yeah, it's the cost of what I'm giving up to get something else. Think about going to the Speedway over here with $5. You make a decision to buy something, that automatically means you cannot buy something else. And that other something else that you can't buy, the cost of that is your opportunity cost. For sure, you need to know the difference between wants and needs. See a lot of different types of explanations or attempts at definitions of those terms. One of the issues that I saw with some people's definitions is you can't use those words in your definition. You can't say a need is something that you need, for instance. You can say a need is something that you must have to survive. That would be a proper definition of a need. A want is something that you desire. It would be nice to have, but it's not required for survival. I didn't use the word want or the word need in either of those definitions. And that's something that I would encourage each of you to learn how to do also. Producers and consumers. You and I, are we producers or consumers?
Consumers.
Mostly, yeah. But what do we produce for our employers?
Physical labor.
Labor, right. We are producers. It's not like we are a manufacturing company, but we do produce something, and that's labor, mental or physical labor for the people that we work for. So that might be a little bit different than what most people would think about when they see the word producer. Somebody that's a producer, you think about a company that's making some product, right? Producer and product, same root words. And part of the reason I have this in here with the basic economics is because it kind of goes back to that circular flow idea, right? Because if you think about our labor going one direction to the business, and what do we get back in return for that? We get paid. We get resources. The business gets the resource of our labor. We get the resource of payment in terms of money. So both parties win in that case. Questions on any of those? Those first 4 or 5? First 4. All right, the next section, generally speaking, money management. Does everybody know how to calculate a percentage?
Multiply 7 by 200.
Okay, what do you get?
14. No.
Yeah, it's 14. But Ruth, you didn't multiply 7 times 200, because 7 times 200 is 1,400.
Yeah.
You multiplied 0.07 times 200. That's 14. So you did the correct calculation, but you didn't quite say it right. So I just want to be sure nobody's confused about that, because what you have to do with, you've got a percentage here, you have to convert that to a decimal. And 7% is the same as 0.07. That's what you're going to use to do your multiplication, to do your calculation. Because that's what you're going to need to be able to do some of these calculations. How are you going to calculate simple interest? Well, you need to know what the percentage is, the annual percentage rate, and then you have to be able to convert that into a decimal.
Can you give another example?
Another example of the percentage?
Yes.
Sure. I'm going to actually do something that I do in a lot of my algebra classes when we're talking about percentages and decimals. Can't draw a straight line. So percentage, fraction, and decimals are all related. So this will be the decimal column. So 7%, the fraction is 7 out of 100, right? Because percentages are based on a number out of 100. You get a 93% score on your test, that's 93 out of 100, right? Even if the test itself is less than that, if it's only 80 points, you know, you can still do the percentage because you take your score divided by the number, the total number of points. So because this decimal or this percentage can be converted to a fraction, we can then also convert it to a decimal, because in decimal form, this first place is tenths. Tenths. And the next place is hundredths. I'm going to just type that. I can't, I'm having trouble with my fingers today. Hundredths. So, and if you want to go directly from percentage to decimal, well, all you got to do is move the decimal place 2 to the left. Because when we move the decimal to the left, we're dividing. We move it one place, we've divided by 10. Move it 2 places, we've divided by 100. So now this 7 is being divided by 100. So 15%. For some people, the decimal is going to be easier to create first because all I got to do is move the decimal over. So what's the fraction? Well, in original terms, it's 15 out of 100. If you're in my algebra class, though, I'm going to tell you to reduce that fraction. It's the same as 3 out of 20, because both of these are divisible by 5. Because fractions, you should always try to get the lowest terms. So another percentage, let's say 3, if your interest rate is 3.4%. Want to do the decimal or you want to do the fraction? Me personally, I always do the decimal. And I start off by putting a few zeros in here. I can add as many zeros to the left of any number as I want to because it doesn't change the number. But now I can move the decimal over 2 places because I have to divide by 100. And my percentage is 0.034. Okay. Now this number out here goes into the thousandths place. That TH on the end of these words, tenths, hundredths, thousandths, that tells you you're dividing. Now you're to the right of the decimal. When you go to the left of the decimal, you get ones, tens, hundreds, thousands, not dividing anymore. So what's our fraction? Well, I could just take it straight out of these numbers. It's 34 out of 1,000. Okay, those are both even numbers. I can reduce that. It's the same as 17 out of 500. Can I reduce that any further? Nope. 17 is a prime number. Does that help, Sarah?
Yeah, thank you.
Yeah, you can use this grid to go back and forth between any form of these. If you get a fraction, then you can change it into something over 100. Okay, let's do that, one of those. So I got this fraction 1/5. How much is that out of 100? Well, 5 times 20 will give me 100, so I can multiply both top and the bottom by 20, and I'll get 20 over 100. So what's my percentage?
Is 5 out of
No. This creates the percentage. 20%. The decimal is 0.2. 1/5 is the same as 20 out of 100, 20 out of 100. If you take 20 out of 100 and plug it into your calculator, you're going to see the decimal form. It's going to be 0.2. So you're going to have to know how to do that when you're being given an interest rate to calculate or interest earnings to calculate. How to calculate simple interest, how to calculate the percentage of a number. Simple interest comes into play on car loans and other situations. Down here's an example. How are you going to determine the monthly cost of a car loan? Well, you got to look at the principal. You got to look at your interest, how much total interest over the term of the loan. Then you got to divide it by how many months you got on the loan. Does that make sense? Because you remember the formula for calculating simple interest? Interest equals PRT. What's the PRT stand for?
Principal rate, time for years, something like that.
Exactly right, Ruth. Very good. Good job. Principal times the rate, which is usually a percentage, times the time in years. That's going to give you how much interest you're going to be charged. So if I have a $3,000 loan and my interest rate is 6%, that is 0.06. And my loan, and obviously I'm buying a used car, my loan is for 3 years. How much is my interest going to total? Just multiplying now. Okay, total of $540 in interest. So the total cost of my loan, take that same example down here. Take your principal plus your interest. So my example, I've got a total cost of $3,540 to pay back over 3 years. How many months are in 3 years? What's my monthly cost? I'm going to have to divide that by 36. 12 months in a year, 3 years, that's 36 years. My monthly payment is going to be $98.33. Everybody should know how to do that kind of calculation. At some point, you're going to buy a car. You're going to need to know and be able to estimate that yourself. Make sure that you're being told the correct information. Be sure you can afford it before you even go talk to a dealer. You don't want to get in a dealership and fall in love with some car and then all of a sudden realize, oh, I can't afford it. That's no fun. Next section, supply and demand. On the test for the first half of the term, that first unit test, I saw a lot of people did not know how to recognize a supply and demand graph. I guess we didn't talk about that enough. Supply and demand are opposite of each other. If you're talking about supply and demand, you have to also talk about how they relate to price. I was also seeing a lot of people that were getting that mixed up. If the demand is high and the supply is low, what's the price going to be like? This is what you have to know. High demand, low supply. What does that do to the price?
The price up.
Yeah, the price goes up. That's the Christmas shopping Xbox deal, when everybody's got to go buy one, got to have it. The demand is there. People are camping out at Best Buy to go get the first ones on Black Friday. And so what happens? They can raise the price because they know it's in demand, and they've intentionally kept the supply low so they could do that. So all those terms that relate to that whole supply and demand question, like equilibrium. Could you explain what an equilibrium price is? Could you find it on a graph? Could you tell someone what the graph meant? Okay, well, if you can't, then that should be another area for you to go back and study. And that's, again, that's the way that this handout is designed. You're looking through this list and you say, I don't remember this at all, or I'm a little fuzzy on this, and you should go back and look it up again. Go back and look at the class video if you need to. You know, the materials on Google Classroom are broken down by topic. Even the class videos that I post, I try to put something in the description for each one that tells you what it was that we were talking about that particular day. So you don't have to sit and look at every single video. You can go back and read the descriptions and be able to pick out the ones you think will be most helpful. Anybody got questions about any of that supply and demand stuff?
No.
Okay, next section here is on insurance. Do you know what it means to say you have a policy, an insurance policy? You got a premium that you have to pay. What's the deductible? These are practical things that every person has to deal with at some point in their life. You're going to have to get car insurance. You're going to have to probably get renter's insurance or homeowner's insurance. So what is an insurance policy? How would you describe it? Doesn't the policy tell you what the insurance company is going to cover? If you have a loss, how do you pay for that policy? You pay a premium. The monthly fee or the fee that you pay every 6 months, that is the premium. You better know what a deductible is, because that's the money that comes out of your pocket before the insurance company starts to pay. Usually, if you have a high deductible, your premiums are lower because now you're taking on more of the risk. Insurance companies love that. So don't ever get a car insurance policy with a $250 deductible. There's nothing on a car these days that can be fixed for $250. You should at least go for $1,000, because that'll reduce your monthly cost for your premiums. And what are some of the things that are going to go into how much your insurance actually costs? Does age make a difference?
Yes.
Sure. 18-year-old males are going to pay more for car insurance than a 70-year-old male will. It's just a fact. It's all based on risk. And the insurance companies have the numbers. They know statistically what's going to happen, what could happen, what's likely to happen. And that's what they base their rates on. You're part of some group that they have studied and have lots of history on that you don't have access to. That's what they do. So if you're looking at the stock market, could you tell me what stock actually is? Is it the stuff on the shelves at the grocery store?
Part of the business, buying into the business.
Yeah, you're buying a piece of the business. You're buying into the business, right? It's not the stuff that's sitting in the Amazon warehouse. That's a different kind of stock. We're talking about shares of stock. We're not talking about a physical product sitting on a shelf somewhere. You work at the grocery store, you stock the shelves, or you stock the shelves at Lowe's. It's totally different totally different meaning than shares of stock from an economic standpoint. So do you see anything on that part of the list there that you don't know about? Dividends. Most of you did a really good job with the calculations of profit or loss on that one assignment. Do you know what a stock portfolio is?
The way the stock has gone in time, over time.
No, actually, a portfolio would be like the type of sort of if you collected or a collection of all the stock that you own. What's in your portfolio? If you think about it, like all a portfolio being a folder where you're putting in shares of stock. You know, typically you don't get paper shares, but you could. All those that you put into that folder, that's your portfolio. You know, you don't want all your shares of stock to be with one company, because look at what happened to Jim Carrey and Tia Leone in that Fun with Dick and Jane movie. They lost everything when the company leader scammed on everybody and bankrupted the company. They had all of their portfolio was in that one company stock that Jim Carrey worked for. And then of course they went and did goofy stuff after that to try to make a living. So portfolio being diversified, meaning you mix it up. You have different types of companies, different industries involved. That's going to level out. It's going to, some businesses and some industries are going to do well while others are not. So if you're diversified, you've got a better chance of sort of riding those tides out and still making money. Next section on here is about business operations. You know the difference between those types of organizational structures: sole proprietorship, partnership, and corporation. There's one thing that differentiates. If you're an individual, what's the big difference between how you decide to create one of those structures. Think of the McDonald's hot coffee example we talked about in class. What would happen if you were the only owner of a company and your employee spilled that same hot coffee on somebody? Is it going to have the same effect on you as a sole proprietor as it would on a big corporation like McDonald's?
No.
No, it's going to be
Probably gonna
worse
hurt
because you're going to be personally liable. Corporate liability, the shield from liability for individual liability, is the biggest reason to create a corporation. Because that employee is not going to get sued. The manager of the store is not going to get sued. The president of the company is not going to get sued. He might be named, but he doesn't have to pay off any of that. That all comes from the corporation. Liability. If you don't remember anything else about business structure, the choice for the type of structure is really all comes down to how much liability you're willing to handle. If you're willing to put yourself and your car and your house and your family's finances at risk, then be a sole proprietor. Probably not a good idea if you have a big operation with lots of employees and lots of activity. You know, if you're just a photographer, it's probably not that big of a deal. But any kind of larger enterprise that involves lots of people and lots of activity, you need some protection from liability. That's what the corporation does for you. Types of competition, should know what those are. Monopoly's bad, pure competition good. Good for who? Us. Consumers. We want competition. We don't want monopolies. Because if there's a monopoly, they can charge whatever they want. That's not good for us. Competition, though, people have to compete based on price and quality. That's a good thing for consumers. So monopolistic competition, oligopoly competition, those are two other aspects that you should know about. I think we spent most of the day on all of that stuff. Role of government. Hopefully everybody has written their letter to the president. That was one of the assignments. Telling them what should be done with our money, our tax money. And, you know, in that first test, I also was still seeing people that didn't understand where government gets its money. So what are the two main sources of revenue for the U.S. government?
People in gold. Just kidding.
People, yes. Because we pay taxes, right? It's personal income tax. And unfortunately, our government spends in a deficit. So what do they have to do to make up the difference?
Raise taxes.
Well, that's one option, but politicians don't like to raise taxes. What do they actually do? They borrow. They borrow money. Our government, 30% of government revenue comes from borrowing. Another 30% comes from personal income taxes that you and I pay. If you don't have those two things identified, then you've missed the boat. You don't understand what the sources of revenue for the government are. You know, we looked at some pie charts, we looked at some other graphics. All that information was in there, so go back and check that out. For sure, you need to look up and understand fiscal and monetary policy. They're not the same. Different parts of the government are involved. So who's involved with fiscal policy? Fiscal policy is all about taxation. Fiscal policy is about federal budget, state budgets, governmental budgets. How do they raise money? What do they spend it on? That is fiscal policy. The president starts the ball rolling with a proposal of a federal budget. Goes to the House, then it goes to the Senate, and then back to the president. Nobody else is involved in that process. Congress and the president. Be sure you know that. Now, monetary policy is completely different. There's one entity involved with monetary policy. Who's that? I hear cicadas out there. I don't hear any answers. Better go look it up. It's the Federal Reserve. It's the Fed. They're the ones that established our fractional reserve banking system. You better know what that is too. The three parts of the Federal Reserve. Nobody will remember that, I'm sure. The Board of Governors, the banks, the Federal Reserve Banks, and the Federal Open Market Committee. Those are the three parts. It's in that movie we watched. Section on taxes is about how it affects your paycheck, what it looks like, what things come out of your paycheck. Calculating your net pay, which can be a good thing if you're thinking about changing jobs, or even if you just want to estimate how much, if you've got a different number of hours worked or you got some overtime coming, figuring out your net pay, taking those taxes out of there can be a good exercise. The last two sections here are about trade. Gross domestic product. Think about how trade has changed over time. So a lot of answers on that on the first unit test that really were kind of off the mark. And the other thing that I'll say about these financial foundations tests is, and the assignments too, for that matter, a lot of times, you guys, your answers are too short. Your answers are too short. And I don't know why that is. Is it because you don't understand something? Is it because you don't have the words? You don't know what to write? I'm not an English teacher. I'm not going to be criticizing your English, but you got to be able to restate facts in a way that makes sense. And if it's an opinion question, I don't know why you wouldn't be able to at least write 2 or 3 sentences. It's your opinion. Opinions aren't going to be wrong. If I'm asking an opinion question, I want to know what your opinion is, and not a half a sentence. So practice, and that's what this financial foundation, all these exams and handouts, all the assignments can help you practice your writing. Any job that you get, you're going to have to do some writing, especially if you get into positions of authority or responsibility where you're managing people. You're going to have to deal with reports. You're going to have to tell your boss what's going on and explain it in words that make sense. And it might not just be your boss reading it. It could be shared amongst the company. So now's the time to work on that kind of stuff. So are there any questions about any of those topics? Because the final could, it's 10 questions, could come out of any of these areas. Now, not all of them are included in the final. That would be too easy if I just told you the 10 areas to look at. But understanding financial foundations in general requires knowledge of all these areas. So if you got good notes on all of these things, it should be no problem. So the final will be out on Tuesday. I'll be here Tuesday morning with the Zoom on in case anybody has questions or needs some extra help. You're fortunate in this term that we have this extra week. You know, we're finishing week 8 right now. Normally we're done already. You know, we've got 9 weeks in this term for some reason. You have an extra week. So take advantage of it. Questions, anyone?
We have class next week, Jay, Tuesday and Thursday.
Only
Okay.
if you want to.
Let me say it again, Ruth.
Yes, please.
I'm going to be here with the Zoom on in case you have questions or you need extra help.
Okay.
If you don't have questions, if you don't need extra help, you don't have to come because there is no new material. This is everything that goes into the final.
Okay.
If you have assignments that you have not done yet that you're struggling with and you need help on, then you should come on Tuesday during the Zoom session or come into class. Tuesday and Thursday are both going to be like that. I'll have the Zoom up. Anybody that needs help, come on in. Otherwise, go do your work, finish, get done, get the assignments in, get the tests done. Okay?
Okay. Thank
You don't have to be here. You know, Tuesday, I think the test comes out at like 10 o'clock in the morning or maybe noon. You know, so if you finish the unit 2 test and you have all your other assignments in, then, you know, you got a 10-question final to do, and that's it. Got quite a few people that have a lot of assignments that have not been done. So if you're not sure where you stand on things, and then that's something you should probably contact me about. That's it for today. It's a short class today, guys. There's really nothing else to talk about unless you all have questions about something.
Okay. Thank you, Jay. Bye.
All righty. See everybody later. Have a good weekend.
Hey, Jay. Hey, I got both of those tests turned in.